Most people think making tax digital means filing your tax return 4 times a year. It does not. The 4 quarterly updates are just summaries. The submission that actually calculates your tax bill, the one that replaces your old self-assessment return, is called the final declaration. And it is the one submission you cannot afford to get wrong. Let me explain what it is, what goes in it, and when it is due. Throughout the year, you send HMRC 4 quarterly updates, rough summaries of your business income and expenses. The final declaration comes after all 4 at year-end. It pulls those 4 quarters together, lets you correct any estimated figures, and confirms your full tax position for the year. This is the submission that replaces the old self-assessment tax return. Same job, new name, done through your MTD software instead of the HMRC website. If you have heard the old term end-of-period statement, forget it. HMRC removed that step. The final declaration is now the single year-end filing. Here's what most people do not realize. Your quarterly updates only cover your self-employment and property income. The final declaration covers everything else too. This is where you add income that never appeared in your quarterly updates. Employment income through pay, if you have a job alongside your business. Dividends, savings interest, capital gains if you sold an asset that year. It is also where you claim your reliefs and allowances. The trading allowance, the property allowance, pension contributions, capital allowances. HMRC pre-populates some of this from your employer and your bank, but you have to check it and add anything missing. So the final declaration is not just a summary of your quarters, it is your complete tax picture for the whole year. The final declaration is due by January 31st following the end of the tax year. For 2026-27, that means January 31st, 2028. If that date sounds familiar, it should. It is the exact same deadline as the old self-assessment return. So the timeline has not changed, just the process. And your tax payment deadline has not changed either. Any tax you owe is still due on January 31st, with payments on account on January 31st and July 31st if they apply. MTD changes how you report. It does not change when you pay. Now here is the part that catches people out. You might have heard about the soft landing for your first year of MTD, where late quarterly updates do not earn penalty points during 2026-27. That is real, but it does not apply to the final declaration. Miss your final declaration deadline and you get a penalty point straight away, soft landing or not. And you cannot even submit your final declaration until all 4 quarterly updates for the year are filed. So the message is simple. Your quarterly updates have a safety net this year. Your final declaration does not. So here is what to take away. The final declaration is the submission that actually matters. It replaces your self-assessment return, it covers all your income and not just your business, and it is due January 31st, 2028 for your first MTD year. The soft landing does not protect it, and you need all 4 quarters filed before you can submit it. Because you have already done the quarterly updates through the year, it should be far less stressful than the old January scramble. Subscribe to A1TaxFiler, and if you are still getting your records in order, our full written guide is linked below. Get your quarters right through the year, and the final declaration takes care of itself.